Thank you for watching again. Every week we try to share you the most important, but also some other insights of the financial markets. And I think today we try to bring you some other stuff. Markets are again on really high levels. It's Thursday afternoon. Markets came down today a little bit, but in the last 3 days, markets went up and records were broken again. No, Martin,
yeah.
Especially in almost everywhere.
Everywhere, yes, absolutely. In the United States, it was insane yesterday. You should say, what is happening here again? 5,400 something on the S&P 500. And then imagine if you've obviously watched the financial markets. Only 8 months ago, we were at 4,000, something like that. And we thought every time when we hit the new record, 4,800, the last record, we thought, okay, now it's going to go down. Because this is not normal, because the interest rates and the inflation is not going down. But it seems like no problem.
And you will close off with one of the most important companies where we talk about a lot. You will close it up with, eh?
Yeah.
I saw a little message in the news, and I think it's quite. It can have a big impact because it was about Gazprom, so the Russian gas company, and they made a loss in 2023 of $7 billion. I think it is $7 billion. And is that a lot? Yes, it's important because it's 10% of the Russian budget. And of course, the Russians, they gambled by closing off all the gas to Europe. And they thought, okay, they will come back later and they have to pay much more. But they didn't, because the Europeans, they reached out to other areas in the world and they bought gas from other places. So Putin is in problems. And also he made a new pipeline and that is operational in 2025, where they can transport gas to China. But this week, those negotiations, they collapsed because China also know the situation of Russia and they wanted to pay not a lot for the gas. And Russia probably said, no, that's not enough for us. So that collapsed.
Yeah.
So that altogether, it's a really big problem for Putin. You see, he's now reaching out to other, not through himself, but also there was in St. Petersburg was the big economical forum of the East, and there he was reaching out to other countries. We have to find a solution with Ukraine, because he is really, and of course the economy is doing not so bad, but it's mainly driven by the weapon industry that they produce. So that's something they produce, but they also use it directly. So that was a little note, but I think it can be have a lot of impact. Another thing, European-wise, the EU, they said, okay, we will increase the import tariffs from Chinese electric vehicles by the 5th of July this year. So that's 3 weeks. They said, okay, they reached out to China. If we want to do something about it, then you have 3 weeks time. If not, because they say that those companies, they have extra benefits from the Chinese government, so there's not a one level playing field. Mm-hmm. And the interesting thing is there is now a 10% import tariff, and they said they specifies per producer how much the new prices percentages will be. For example, Build Your Dreams will go up to 17.4, the Geely, the Volvo of Geely, 20%. And the motor company of MG to 31%.
38.1%.
38.1%, yeah. It's a lot, eh?
Yeah, it's a lot, yeah.
So, and Chinese are not happy with it, and let's see if they can start talk with each other and make a solution. In the US, it's already a high import tariff for all the Chinese cars, 27.5%, and Joe Biden said in all his wisdom that he will increase it to 100%.
I think he's on an election schedule.
So. Yeah. So let's see what's happening with that. The German car producers are not happy with it because they export also a lot to China, and
big
of course China will respond on that.
On the prices, Volkswagen, Porsche, all down 3-4% today. So
we stay in Europe. France. After the elections last Sunday, Macron said we're going to go again on a federal level in France. We will have new elections because there's such a big shift in France, political wise. What's going on? It's not going very well with France. And how do you see if an economy is going well or not? You see it in the bond market. You see the prices of the bonds are going up or down. Because, of course, if the government has to bring out a new bond, then there is a certain percentage on it, but you see it on existing bonds if they go up and down in prices. If they go down in prices, that means that the market needs more risk premium, because then the value of the return, the yield, is going up. And that's what you see. You see, and it's not only since this week, but this week also, but the last months, the prices of those bonds are going down. And that's the opposite of the rest of the, I call France a Southern European country, but it's more middle. But if you compare it to when we had the problems 10 years ago with Portugal, Spain, Italy, and Greece, I have a nice chart here where you see Italy is a little bit still the same. It's always a problem child. But if you look, for example, Portugal, they had a percentage of debt from the GDP of more than 130% in 2020, and it's now gone down under the 100. So they do really good reforms.
Yeah.
Really good.
Yeah, that says a lot.
And it's expected to go down even under the 80 by 2029. And the same, a little bit less going down, so less good, but still good, is Spain. Yeah. It's also gone down. The top was 120 and it's now at around 105. And it's expected to go down a little bit. The Netherlands are always around the 50 and still complaining that the debt goes up, but that are the Dutch. And if you look at France, that's the opposite. France is in this case the red line, and it's expected to go up and go up. So France has a problem, and the problem is mainly for the big institutional investors. They don't have a AAA status. Denmark, Germany, Liechtenstein, Luxembourg, Netherlands, and Swiss, Norway, and Sweden have a AAA in Europe. Yeah. France doesn't have a AAA. They're already downgraded last month by Standard & Poor's, and they will probably have a short of a deficit of 5%, and that will probably end up by the 19th of June, so that's next Thursday, that they are by the European Commission under a sharper, stricter control. Yeah. So there is something else. And the market is really worried about the new elections and about how the landscape is, and they think that the financial stability will get worse. Is this something that investors can do with this, Martin?
Yes. If you have your holiday money or your 13th payment,
give us your thumb already.
Yeah, give us your thumb also. Yeah. So if you have received your 13th month for the summer, you can of course spend it on nice things, but you can also put it in a French government bond. So I'm actually saying Kaspar is trying to scare you here for France, but if you look at a short notice, I mean, France is not going to go bankrupt within the next 4 or 5 months, and it has still a quite high rating. So if you would buy the bond that I'm showing on the screen right now, which is the 1.75%, 25th of November 2024, you're buying it at 99 point a little bit. If you would proratear, I don't speak Spanish now. If you would,
it's French. You can do it in French.
No, I'm not. French I'm terrible in. But if you would measure the interest over a period of 12 months, you would have an effective yield really on your money of 3.6%. So a lot of banks are now trying to tell you, you get 3% fixed for this amount of money. You have to fix it. In this case, it's just, if you still need the money in a month or so, you can easily withdraw it. And the price of this bond will go steadily towards 100 in the next 4 or 5 months. So I think this is a really interesting alternative if you want to invest some money really short notes. But what is interesting, what you were just telling us about the bond market, is a really clear indication on what is happening in a country or a market, or in this case for a debtor. No, if we all go back to last Wednesday, remember that the prices of the interest rates in the ECB are gone down with 0.25%. Normally, that means that the interest rates of markets for France and Netherlands, Germany, of countries, they also go down. And why does that go down? That's because then the price of the bond goes up. In this case, we saw that actually happening with the Netherlands. We saw that happening with Germany. Those bond prices, specifically for the longer term bonds, they went up slightly, or they stayed flat because it was only 0.25% reduction. But if we look at France, and it's an interesting bond that I have here on this paper in front of me, you see it also on your screen. It's the 2053. So it's a very long time, 30 years in time. It's a bond, 0.75%. At the beginning of the year, it was purchasable, it was buyable. You could buy it for 57.50. And at the moment, even though the interest rates are lowered, so prices should have gone up, this bond has gone down. So the bond market is predicting here that France is having to pay you more, right? So they lower the price. The market is lowering the price. It's at this moment at 49. So it's 8%.
It's an indicator.
It's an indicator. And also, if you look at the beginning of the month, it was still at 53. So despite the fact that the bond markets are in another movement, right? They're reversing basically. The ECB is reversing the peak of the interest rates, which should have had a positive impact on the price of these bonds. In France, we see the opposite, and that is something really interesting, I think, for you to look at.
And if I may add something,
yes.
this bond, if you have this bond, when it came out in 2020 something, I don't know, you bought it for 100, and who bought it? The institutional investors that was mentioning. They are heavily invested in those France government bonds. They bought it for 100. They have it on their balance now for under the 50. So they have to write off. They don't have to write off because there's special accounting rules for the banks. But those they have to keep it until majority in 2000. So they have to keep it for 30 years. They can sell it or go, but then they have the loss of 50% on a double A investment.
Yeah, definitely. But you also see this is a 53. But it also, if you compare Spain and France, for instance, Spain we saw that did pretty well. Spain, a 2027 bond, was beginning at the year of around 95. Is at this moment still at 95, and this week peaked a little bit. If you look at France, beginning of the year at 101, is now at 99. So also there on 4-year bonds, you see that France is having to pay more interest to convince, if you talk about small ones, to convince investors to stay in their investments, to stay in those bonds, to lend them money. And that is something to be cautious about.
I think if we can say, okay, if France really is facing problems against the rest of Europe, especially the southern countries, if you want to do something, do it short term. A long term, there is a high risk. Short term, there is a really small risk.
That's true. And then, of course, if you always wanted to buy Nvidia and you thought it was too expensive, you can do all sort of difficult products. But nowadays, Nvidia is tradable at 129.47. And why is that? Because this Monday, the price was divided by 10. So if you had one share, you got 9 extra shares. So that is, I think, a difference, because we still have here the box from a couple of weeks ago of the Lotus factories. They said, we don't want to split our stock. Nvidia did it, and I think it's working well, because the price is at this moment, just a half an hour ago, is going up again with 3.5%. On Monday, the price was added an additional value of 150 billion, and to put that into perspective, that is the same amount of value that was added. That is the market capitalization of a company like Intel. So in one evening, 150 billion is added. If you like options, and we know you do, because we had quite a lot of positive feedback on our vlog from last week, you can now also start thinking about options. And of course, options are not without risk. If you sell an option, you have an obligation to deliver something or to buy something, so you need to own it or you need to have cash. Pay attention to this. Again, we're not going to give an option training, but in the past, selling one option on Nvidia, a put option, would have had an obligation to buy of $100,000. At this moment, if you would say I would sell one put, 110 for instance, you get $1 and you have to buy for 110, which is an obligation, always about 100 shares, is $11,000 US. So it's much more accessible for a lot of clients. So I just want to show you that if you want to do something with Nvidia and you have some knowledge of options, look at the option chain.
Yeah, and also for a lot of people that had 10 shares and they couldn't do anything with options, and now they have 100 shares and now they can sell a call option on it.
Also, if you have the shares. And now also the example that we gave, both of us gave last week. If you look at the put options on Nvidia are relatively cheap. So if you would say you buy a put option 117, cost only $2. And if you would sell some premium on above, because you say, okay, I don't care to sell the stocks now. There's a lot of premium in the stock. And I would say, have a look at it, because it's interesting. It's interesting to work with that. And let us help you if you need some support.
A lot of information today, Martin.
Yes, I think
from
it's
stocks, options,
from Russia to Nvidia, from
bonds.
France to Europe, everywhere, all over the place.
Thank you for watching. Give us your comment and give us your time.